Hello and welcome to Financial Planner. It's a show where we talk about complex financial concepts and break them down into easy, digestible bits. My name is Smriti Rao and with me certified financial planner Sumeet. Vaid. Over the last few days, the direct tax code bill has dominated the headlines. Entire news segments talked about the new code, but among the jargon, most of us didn't really understand what the new tax code actually might mean for us or for our investments. On today's show, we decided to take some of the biggest questions viewers wrote in with, and then the idea is that we try and answer them in the simplest possible way. That way you can not just follow along, but you can also be informed when you make any big investment decisions going forward. So let's get started right away, and I'll tell you what's coming up on the show today. We'll take a look at the direct tax code proposals as it impacts our money in three different ways. First, what the direct tax code actually means for our investments, our mutual funds, our FDs and the like. And then what does it do to your insurance and also to your retirement planning? If you're retiring soon, do you have any cause for concern? We'll try and find out all about that in just a little bit. You can be part of this conversation by emailing us at financialplanner@utvmoney.com. You can also join in at facebook.com/Smriti Rao. On Twitter, find us at UTV Money. So, Sumeet, welcome. Thanks so much for being here. So for everyone watching, we want to first remind them that these proposals don't come into effect till April 2012. So there's lots of time for most people to just take a deep breath and be prepared eventually. So the first thing we want to talk about is just look at the income tax slabs. There are new tax slabs proposed, so talk us through them.
Sure. As you introduced, Smriti, direct tax code is a direction which government is taking, trying to simplify the structure. There has been a lot of positives and negatives, which media has been talking about it, but we should try and underline the direction in terms of emphasis on simplicity.
Right.
And this is a journey. This is not a destination that will happen at a point of time. It will happen over a period of time. And my personal view is it's a good start.
It's a good start.
It's a good start. So let's start with what's the income tax slab which they're proposing now. The income tax slabs have got converted into three slabs, just like earlier times, but the underlying income has changed. So first slab is 2 to 5 lakhs,
right,
which is 10%. The second slab is 5 to 10 lakhs, which is 20%. 10 lakh and plus 30%.
Right.
That's the slab which they have come up with. For senior citizens, instead of it starting at 2 lakhs, starting at 2.5 lakhs,
True.
everything else remains same. Women who used to earlier enjoy the benefit, they don't have that.
Yeah.
And we'll talk a bit about it in terms of trying to do that. But these are the broad slabs which is happening or being proposed in 2012 DTC.
Right. So I want to bring up the graphic one more time. So in case you want to look at what tax slab you come under, so here's what we've got. The new income tax slabs are going to look something like this. If you earn anything between 2 to 5 lakhs, the amount of tax that you're going to pay is 10%. If you're earning between 5 to 10 lakhs, then you'll pay 20%, and income over 30 lakhs, you'll be taxed 30%. So that's a new income tax slab. And like you mentioned, Sumeet, in all of the existing tax slabs, till now, as a woman, I was getting preferential treatment, but I don't see that in the new tax code proposals. So do you think the women have gotten the short end of the stick, as it were?
Not exactly. I'm all for equality. Right from the beginning, we have been talking about there's no difference between women and men, and especially in the working arena. If rights are equal, I think we need to treat them equal itself.
So everyone pays equal tax?
That's right. It's a big statement. I think it's a big statement. We should look at positively from the women's independence point of view. Their growing stature in the corporate world. We see so many women doing so well for them at various positions. So in a way, it's a gender equality bit. And at a personal level, I'm very happy about it. It is giving due respect to the woman by saying there's no difference between you and men.
Wow. Okay, so a big thumbs up over there from Sumeet's side for that, those potential loss of benefits as I see it. But moving on, most of us have some money lying around at home. We keep that for emergency cash, maybe keep some money away in the banks. What does the DTC say about that?
So let's from your emergency planning point of view, if anything is being kept as cash at your home until the time it's being declared in your income tax return, there's no problem, I think, and it continues to remain taxed in the same way. There's no changes. When it comes to bank fixed deposits and savings bank account itself, there's no change there even being proposed.
There's no change
There's
at all.
no change, especially from the emergency planning, because it's a short-term planning. You know, we are just trying to make sure for any emergency cash flow requirement. We're not talking about long-term fixed deposits. We're not talking about any long-term duration itself. So there's no change in that.
So no change in that. What about fixed deposits? I know for a fact that a lot of people put money away for fixed deposits. Right now, for all the interest that I earn on my FDs, I'm getting taxed on that. Is that going to change going forward?
No, that also doesn't going to change. The only change in the bank fixed deposit is 5-year plus fixed deposit. Those long-term fixed deposit used to get some tax benefits. That's going to go.
Okay.
And if you really see and try and work out data, and this is my sense, I'm not really sure whether I'm correct with the data itself, but there was very few takers of that 5-year plus kind of a fixed deposit. And even banks were not very encouraging that, because for them to predict interest rate for over a period of 5 years in this kind of a volatile period was not very easy. So it was not a very attractive product. So yes, there are some changes, but I don't think so anybody's going to miss out in a big way.
On the FDs especially. Next up, I'm asking about life insurance. Most people do get worried about their insurance. Right now, each time you pay premium on your life insurance, you get a tax deduction. Is that going to change?
This is the best thing they've done. I think, personally speaking, this is to me the highlight. Why? Because they have finally made sure nobody invests in life insurance.
Yes, which is one of your biggest grouses in there.
That's right. And I think the whole financial planner, if you're a true financial planner, if you're a certified financial planner, you'll agree with me that investing in insurance is somewhere wrong English. You know, you have to buy insurance, and that's what this direct tax code is trying to address itself. So if you are buying insurance in terms of term plans and term policies, you'll continue to get the benefit which you should be getting, which you were getting in the earlier era also. The only thing is this has got specified within the exemption limit of 50,000 rupees, which includes health insurance, which also includes tuition fees.
Right.
But there is a specific limit for that. What also it does is, as of now, and I hope it continues, ULIPs are not part of it. As of now. Because it's still some time away in terms of rollout. But as of now, unit-linked investment plans are not part of it. So we'll not force people to invest in insurance to get tax benefit. And one more point I need to highlight here, Smriti, for benefit of our viewers itself, is go through insurance collections. Most of the insurance collections happen in the last quarter of the year, which is January to March.
Because people are doing it only so that they save on tax.
That's the worst way of doing it.
Right. And you should, and we've talked a lot about this, about the way that we should be looking at insurance as a form of risk planning, or just making sure that your assets, your life, your health is protected. Talk to us about how important that is.
It is very, very important. I think in today's era where the risks are increasingly increasing because of so many uncertainties in life, insurance based on human life value calculation, adequate insurance is much more important. And that's where this whole insurance to do tax planning somewhere take us off course, because then certainly our merit is not on what insurance I'm buying, how much am I buying, whether it's adequate for me or not. It's more on how much tax I'm saving, where am I investing, what kind of incentives I'm getting, and all those things on which basis we should not be deciding about. And I just don't understand till this date, how can you only take insurance between January to March? It cannot happen.
It doesn't make any sense.
It doesn't make
defeats
sense.
the whole purpose of having insurance in the first place.
That's right.
Right. Okay, I'm going to ask you about medical insurance very quickly because we have to go into a break.
Medical insurance is another big thing which this DTC is talking about. The limit is increased from 15,000 to 50,000. It's in the same limit of exemption which is there for life insurance and tuition fees. But what it also directionally, is giving a signal is that cost of medical, treatments are going up, and government is sensitive about it and is encouraging people to try and get adequate medical insurances for the whole family. So I think this is a big, big positive.
That's another big positive.
Yes.
All right, we'll talk about mutual funds. If you have mutual funds or are worried about how the new direct tax code is actually going to change that, what are the things you should be looking out for? We'll talk about that when we come back. Sumeet will still be with us. Join us right after this.